Hello everyone, welcome to the Trendline Investor channel. In today's video, we're going to look at the auto sector. The auto sector is going to be a focus for the primary reason that it has stood very well in the last 1 month's correction, and the sector as itself looks good, and a lot of stocks have already started moving, and that's going to be a primary focus today. But along with that, I'm also going to give you a short outlook on Nifty, and we can also look at the US markets and see what actually the markets are doing. Are we forming a bottom? Are we, do we still have a long way to go before we head higher, or is this the final bottom, right? And after that, from the auto sector, we're going to look at two stocks which are, kind of small cap companies which have done really well in the recent quarters. Especially one stock that we're going to look at has done really, really well, and it's from the auto ancillary space. Okay, so before we jump into the actual video, in case you haven't subscribed to my channel, do subscribe. There are a lot of videos to learn from. Especially I have a playlist called Learn with an Investor, where you can learn from my videos, trading, investing, how to find stocks, how to trade them, and how to pick stocks for investment. And don't forget to like this video as well. And let's look into today's video. So as usual, I'm going to look at the Nifty overview. I'm going to give you a Nifty overview, and we're going to look at the multi-time frame analysis of usually that we do in my channel. So if you look at overall the Nifty index itself, the Nifty index on the monthly charts has been seeing demand on every dip. So if you see, we've seen wicks. So these long tails, if you see, these are demand, right? And again, if you focus on this month, we're again seeing a long wick forming. Now we still have one more week to go before this month is over, but I'm already seeing some signs, of Nifty forming a wick here, which is showing that every dip is being bought. Now, some people might say that this dip can, it's also showing that sellers are getting in, more aggressive, and that's why the markets are falling. But for me, as of today, in case we tend to close above, the levels of 15,670, which is the March low, in case we manage to close above that level, which is 15,670 by the end of June, which is also the low in the month of May. So then for me, that's kind of a short-term bottom, at least, if not a long-term bottom, and we might see some good rally, at least a 10 to 15% rally in Nifty, which means the overall markets we can see some very good rallies in the short term, and that might take the market higher. Now just switching to the weekly charts here and just showing you what is happening in the weekly charts. So weekly charts, if you see, we have this major bottom which is forming, major support which we have around the zone, and that's also one of the reasons why I'm bullish, and I see that markets might be forming probably a short-term bottom, at least if not a long-term bottom. No one can predict long-term what can happen in markets, but at least short-term you can kind of have a sense, and you can say, okay, this is the major support over here, and we are kind of retesting, and we've already tested twice, and now we're kind of checking that levels again. So from my opinion, if we're able to close this next week, so next week is very important week because last week of the month, if you're able to close about 15,870 levels, right, that's the gap. So if you're able to close, and then probably in the first week of June, if you're able to close about 16,200 levels, then probably we formed a major medium-term bottom. For next 2 to 3 months, we might not see much downside, right? But note, keep an eye on this zone. This zone here is very, very important because we had almost a 5 months consolidation before we had a strong move, and we're kind of retesting that zone again. Right now, there's every chance that the markets can head higher, and probably fill this gap, and then we might go below again. So that's a possibility. Don't forget the possibility. But for me, finally, if I have to say that markets have really formed a bottom, then it's this trend line. When we break this trend line, which is 70,760 levels, or 770 levels, or 18,000 levels, that's when we have really formed a long-term bottom, and we might head higher. Okay, so but by the time the market comes there, we might lose a lot of money already. So I don't want to do that, and that's why I'm saying, okay, probably we formed a short-term bottom here, and we might head again back towards this level. And if we break out that zone there, Nifty, then we can head higher from here, towards levels of 20,000 probably the next 1 or 2 years or so. So that's my outlook on Nifty. Now let's just take a quick look on the US markets as well, because US markets also define the Indian markets. And in fact, if US coughs, there's a saying, if you have sneezes, then we catch a cold, right? So let's take a look at US markets as well and see what US markets are doing. Now, US markets also in the monthly charts, if you see, every dip is being bought, and in the month of May also we dipped, it also was bought, and again we have dipped, but this month towards the end again it is being bought. So for me, looking at both the US and the Indian markets, for me overall I feel that there is a potential bottom in place which might hold for the probably next few weeks, next couple of months. I'm not sure how long it will hold, but definitely we are forming a bottom, and we might see some good rally in many stocks in the coming weeks ahead. Right, for me, the stop loss, if you want to keep a stop loss for all your stocks, just keep it as the low of Nifty which we formed this month, and that should be good enough. Or you can keep also your stocks, individual stocks, as stop loss. Okay, so that's my outlook on Nifty and the US markets. So I'm sure you have your own opinions, especially when the markets are bleeding. Everyone has their own opinions. Do let me know your comments on what you think the markets are doing, and we can have a healthy chat on my Twitter channel or YouTube's comment section. So don't forget to do that. So now I want to look at the auto sector. The auto sector has done phenomenally well when I'll not say it has given very good returns, but what auto sector has done is it has stood its ground in spite of the overall markets being bearish. Right now, if you just take a look at this chart of CNX Auto, so we did try to go all the way down from 4,000, we went all the way up to 12,000, so that's a 3x from the bottom. We did hit and then we kind of came down, right? And now we are kind of forming inverted head and shoulders pattern here, right? So if you see, this is left shoulder, then the head, and probably we're forming a short right shoulder. And if you look at the quarterly charts, right, on the quarterly charts, we have formed dojis, right? So by dojis, I mean they are indecisive candles, which means the markets, after moving to that top, they kind of were going sideways for some time, right? So we have not really broken. So for me, that level of 9,300 is a very, very strong support there. And now I'm looking for a breakout about 12,000, and we are heading probably into new all-time highs in the auto sector. Right now, that the wick here in the last 2 months chart gives me confidence, and this month is also end of the quarter, and this month if we're able to cross about 12,000, that would be excellent for the auto sector, and we might see some really good returns from the auto sector in the coming months. Also, just take a look at the monthly charts. Again, you would see that we had a strong wick over here. We are having strong wicks indicating that the lows are being bought, and we are heading higher again. Right now, switching to the weekly charts, again you see we did have a doji here, and now we have a very strong, you could call it it's a very strong strength candle. Some people might call it a bullish engulfing candle or whatever it is. I don't really give importance to the names, but what you want to notice here is that strong green candle that we are seeing on the auto index. Right now, that's what is giving me confidence in this index, and overall I think the selling is over and we are probably heading higher. Now, what I want to also show you is the latest trend. I'm just going to close these. Right, so if you look at the CCI has also gone above 100 again. Now, if you've been with me for some time, you know that CCI above 100 is a very strong sign of bullishness, and also latest strength has hit a new all-time high. Right, so in spite of the entire fall, latest strength has been making higher highs already before auto index itself has been making higher highs. So for me, overall, unless we don't, go below these levels of 10,000, or even if you look at the weekly charts, unless we don't go below the levels of 9,200 levels, for me, auto sector is a buy on dips, and we might see some really good moves going forward. Okay, so that's my overall take why I am bullish on auto sector. I'm sure most of you have already been in, some of you have already caught the bottom in these stocks in the last 1 month or so, and you've already invested. Do let me know which stocks you're invested. But I'm going to discuss 2 stocks today, which are from the small cap space. And the first stock that we're going to discuss today is Goodyear, which is it's not really like a Maruti or a Raica Motors. It's more in the ancillary space. Goodyear manufactures tires. So we're going to look at Goodyear today, which is the first stock that we're going to discuss. Don't forget to stay and listen to the second stocks as well. But first stock, we're going to look at both the fundamental and technicals as always. So let's take a look at the fundamentals first before we jump into technicals, and we'll see why this stock probably makes sense to buy at this point. So Goodyear, as I said, is involved in the business of manufacturing of trading of tires, tubes, and flaps, and all that. Most of us know Goodyear. It's a very well-known company in India, and at least we've seen that throughout. If you've been if you're around 20-30 years old, you might have already heard this many times, because if you've been riding, if you've seen trucks or if you've seen passenger vehicles, most of these have Goodyear tires, right? So they do manufacture farm tires, commercial truck tires, tubes, flaps, even for passenger car tires also. And you can go through this, just take a look at this screenshot and website, and you can find a lot of information on this company. But what I want to focus today is on the aspects like ROC and ROE. Now this is a pretty decent company. It has ROC of 18% and ROE of 13%. P is around 22%, which is kind of fairly valued, or probably undervalued if you're looking at a 18% ROC. I think the company at least should be trading at around at least 30 levels. Okay, The book value is around 310, and today the stock is trading at 1,000 rupees. So that's kind of 3x the book value the company is trading at. As always, let's take a look at the P ratio. And if you look at the P ratio here, we've been historically, it was trading at 133, 33. That's because of the low sales. I would not go into those numbers really, but what I want to look at here is the sales growth, right? So if you look at the earnings per share hit a high in the August 2021. We hit a high. They're kind of going down, but for me the overall trend is kind of up. If you see since 2014, we are kind of overall up, and I think this is a pretty short-term dip in the sales, and we might head higher. In terms of profits, and we might head higher again. Now, some of the positives here is the company is debt-free. It has given a recently very good quarter. That's one of the strong reasons why I'm looking at this sector today. Okay, let's take a look at the quarterly numbers. So if you look at the last year, we've done pretty good in terms of the sales. We've had a 700 crores sales in September, followed by 600, almost 600 crores again. Overall, for me, that's a very healthy sign. Compared to the last quarters in 2020-21, we have done pretty decent, and the margins have been around the 6-9%, which is not really great compared to 12% in March, right? So definitely that's a very, very sad thing that the company was not able to give same margins, right? But look at the overall trend in the sales. Since 2010, the company has almost managed to double its sales. Now, especially in the last 1 year, something has changed probably in terms of the company strategy or something. I'm not pretty sure. If you know, do let me know. But what has definitely changed is the sales has increased drastically after some consolidation in the last few years. But the only problem here is the operating margins, right? It has gone down definitely, but for me the sales growth shows some signs for this company, and the profit has kind of remained stable around the 100 crore mark, 130 crore mark. Okay, borrowings are pretty good. They have hardly any borrowings. They've just started borrowing some things. Reserves have been pretty good again, 800 crores, 600 crores around. And promoters hold a very significant share, 74%, whereas FIs and DIs hold around 7 to 8% of the entire share, and public holds around 18%. That's the fundamental analysis. Now the only point I want to note here is the sales growth that has happened here. Probably once they start growing bigger and bigger, maybe the operational efficiency start kicking in, and then we might see some increase in the operating profit margins. But for now, I'm not sure whether that will happen or not. All I'm saying is this number looks definitely good, and they have been able to. They are a profitable company. They have been able to manage the profits overall, so that's a good sign. Let's take a look at the technicals and see what the charts tell us. Now, as a rule, always start off with the monthly charts, or if you're starting with the quarterly charts, that's even better. You might see some really good overall trend in the price movements, and you get a feel of what the stock actually can do in the long run, next 5 or 10 years. Right now, look at this chart since 2005. Since 2005, we've been in a very, very strong uptrend, and we've just been going higher and higher. We've had some dips, some 30-40% corrections. In fact, here we had almost a 70% correction, but these corrections are pretty common in markets, and they kind of tend to reverse and again head higher. So looking at the quarterly charts, so we had this massive sell-off in the during COVID, and then we had a rise, but all that got sold off, right? So there was selling every time, and it goes up. So these long wicks on top indicate selling, right? So whenever there's pressure, then the stock starts coming down, right? Now after this massive move up, what we are seeing is we have again the stock started dropping. It started coming down, and we again saw some demand here. Then it was kind of 3 quarters of solid selling, and now again this quarter we are seeing a rise in the share price with some not very great volumes, but at least the volumes are greater than the last quarter, right? But for me, the good thing here is the stock has formed a major bottom over here. If you look at this zone here, we formed a pretty major bottom, and that bottom looks that looks like a long-term bottom in place. And for me, that's going to be my stop loss. So my stop loss from an investment perspective is going to be around 840, right? Now before that, let's take a look at the monthly charts, and I'll show you also what I'm looking here at the monthly charts. Now the monthly charts, if you look at the last month, in spite of the sell-off in the markets, we did not see a drop in the share price here. Rather, we saw a long wick, which indicates demand here. Now we are seeing an uptick this month in the stock prices, right? And also we had a breakout here. The previous swing low was this one on the monthly charts, and we kind of reversed from the swing low. So the higher high, higher low structure is still intact, which means the overall uptrend is still intact in the stock, and even in spite of the selling, the stock has held strong. Okay, now I'm also going to show you the weekly charts here. On the weekly charts, if you see, we've had a breakout from this downtrend, right? So we had a decent big breakout here. So in the week of May 23rd, we had a breakout, and last 4 weeks we have been going sideways. Last 3 weeks we've been going sideways, and the relative strength has crossed the 52-week moving average. Now, if you don't understand relative strength, there is a video that I've made. It has to be, you see that in the top right corner or on the top left corner. Just check it out and understand relative strength. It's very, very important to understand relative strength, because stocks which tend to stand strong during bear markets are the first ones which will start to move ahead, in terms of the movement. That's what I'm looking here. So the stock has given a breakout here from a trend line downward trend, and now we are kind of going sideways here. So just going to the daily chart here, you will see again we are going sideways in terms of daily chart. After that move up, we had a gap up and we're going sideways. So for me, this is a very, very, very good setup. You can buy at current market price. If you're investing from a 3 to 5 year perspective, keep a stop loss of 840. But if you're a short-term momentum trader, keep a stop loss at 990 and only buy above 1040. Okay, so remember, if you're an investor, you can buy at current market price, any price at current market price will stop at 840. But if you're a short-term trader or a momentum trader, buy above 1040 levels and keep a stop loss at 990. Right, that's just a 50-point stop loss if you're a momentum trader or if you're a swing trader. Right, and we can look for probably targets of 1025 for short-term momentum trading. Right now, that is almost 150 points, which is 3 hour or 4 hour trade. But we can look for even higher targets if you're willing to try the trends. But if you're an investor, don't sell off because you're going to see much higher targets. We are first going to see 1300 levels, and then we can also see 2000 levels in the coming months or the coming years. Right, so if you're an investor, do hold on to the stock. Allocate 5%, don't allocate more than that if you're an investor, and let's ride the trend in Goodyear. So that's my analysis on Goodyear, which is a tire company in India. And if you did like my analysis, don't forget to like this video. And let's look at the second stock, which is in the same auto space but more in the lighting, manufacturing light bulbs for cars and vehicles and all that. I'm sure you guessed the name. It's LUMAX Auto Industries. So let's look at that stock, which is our second stock for the day, which is LUMAX Industries. Okay, now this is a very, very good company. Again, it has a ROC of 10.9%, 11.8%, P of 24.8%. The stock is trading at just almost 2.5 times book value. As I said, it is it is in fact a market leader in the automobile lighting space in the Indian automotive industry. Okay, just taking a look at the EPS has not been great. Now, entire auto sector has not done well since last 4-5 years, and that's why the auto sector as a whole has been consolidating or correcting. And if you see here also we've seen a dip, but again we are seeing now a rise in the earnings per share of Lumax. Okay, looking at the overall sales, if you look at the recent quarter, we've had a very good recent quarter, almost a 10% jump in sales since the last year on year, and profits also has seen almost a 10% jump, quarter compared to the last year, March 2021. Looking at the overall sales trend, from 800 we've gone to 700, which is almost a 2x sales again, like we saw on Goodyear, and it's pretty decent. The margins here, unlike in Goodyear, here the margins have been stable on the 8% mark, and now we are seeing here around 35 crore in sales. Right now, so here the sales growth, has if you see the long term, the company has been doing well, 7% CAGR in the last 5 years. Even the profit growth has been around 1%. So profit has not been that much, but I see that this stock is technically also looking good. We look at it shortly. Taking a look at the borrowings have not been great, right? So if you look at this P&L here, you'll see that increase in the interest, and that's why it's eating up into the net or the PAT, the profits after tax, and that's one of the problems I see, but it's not a major concern. The company, unless it remains profitable, I think they can serve the debt, but it also has a decent cash in its books. So it has some 400 crores in cash in its books, so that's a good sign. They can pay off the debt, not a big problem for me, unless they are expanding, investing in the right business. It's totally fine. Okay, the final thing is the shareholding pattern. Here the promoters hold a good 75%, whereas there we saw in Goodyear 75%, and here majority of stake is held by public after the promoters. So overall for me, it doesn't matter if FIIs buy. FIIs will finally come to a stock whenever they want to, but for us, fundamentally it's a decent company. It's growing decently in terms of sales, and it's available at pretty decent valuations. Okay, so that's my fundamental take. Let's take a quick look at the technicals as well. I said, go to the quarterly charts is much easier to see, right? So again, if you see here, we've had some really good moves. Overall, long-term trend is up definitely, and we've had a breakout, in April 2016, and then we kind of having a consolidation mode. Now I'm taking the same trend line that we did in a good year. I'm just going to connect this. I'm just going to connect this point here, and then if you see, we have this range of the zone here where you kind of reverse every time. So right now Lumax is in that zone again, and Lumax is also just around that previous swing low on the quarterly charts, right? So it has again reversed from here with really good volume. So last month selling has been great, so that selling has been completely absorbed. We saw some really good selling volumes here, and again we're seeing some really good buying volumes this month, but both have been absorbed. Both are indicating buying and not selling, right? So for me overall, these last two quarters or last 6 months has been fantastic in terms of buying volume. So for me overall, this is a very bullish sign. Switching to the monthly charts quickly, just show you what's happening here. On the monthly charts, we kind of formed a double bottom here, right? So if you see kind of double bottom, or whatever you call it, we kind of had a strong support here, reversed from the same support. If you don't know what is double bottom, it's totally fine. You don't have to know everything in technical analysis. All you need to know is this was a swing low and we kind of reversed, and again we are heading higher. Now for me, this level over here is a very major resistance zone. So around 1600-700 levels is where I will see some resistance, but for now we should easily go ahead and touch those levels. So I'm just going to diving more into the weekly charts, and I'm going to show you what we're looking at here, right? So if you're investing in this company, then you should keep your stop loss around levels of 860, buy at 1290 levels, keep a stop loss at 860, allocate 5% of your portfolio, and ride the trend. The stock can go to much higher levels from here. So from an investing perspective, I think that we are going to see first levels of 2500, which is almost 100% from here, and we can also see much higher levels if the stock is able to perform. So what I'm looking forward to from an investing perspective is the stock might head to the upper end of the channel, which is around levels of probably around levels of 4,000 5,000 levels in the next 3 to 5 years. Okay, so that's the take from a investment perspective. But if you're trading for a short-term momentum or swing trading, you can buy at current market price, because we already broken this zone over here and we've already gone up, right? So for me, it's already a good buy. Probably this was the best buy over here at this point, but that's totally fine if you missed it. We are still forming just the first dip, first consolidation. We'll still have at least 3 to 4 consolidations going forward. So you can buy at current market price with a stop at around 1080 levels. Okay, so this is from a trading perspective. From a trading perspective, 1080 is going to be a stop loss, buy at 1290 current market price, and ride the trend probably as much as possible. Or you can also go from a risk reward perspective. So if your risk is here 10%, look for 30 to 40% reward, and then book your profits around those levels, right? But for me, I'd be watching these levels of 1670 to 1700 levels, because if you take out that levels, then you're going to see some really good moves going in the coming days. So these are two stocks that I want to discuss today. I'm sure you loved both the stock ideas and my outlook on Nifty. In fact, if you did like this, so don't forget to like my video and subscribe my video, subscribe to my channel, and don't forget to share this video with friends. That's it for today. I'll see you in another video soon next week. Until then, take care, and don't forget to watch my videos in the Learn with Trendline Investor playlist. It's going to really help you learn and trade along with me. Thank you. I'll see you in another video. Bye bye.